Many say they'll take Social Security benefits early despite lower payments. Bear market loss is a dangerous illusion, and many Americans expect to rely on Social Security benefits when they retire but are worried they won't get them. That and so much more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome in to Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins, and we have special guests on the show today, Craig Roth and Steve O. Flynn. You can find them all at Elevated Financial Management, the power behind this program. There's well over 42 years combined experience in the retirement planning business between these four. And again, it's all about helping their clients get ready for retirement. I'm Morgan Patrick. It's a pleasure to be on. I want to remind you that both Mark and Casey, certified financial fiduciaries, and again, about the plan, being prepared. It's always fun to get into these discussions. I always ask this question of Casey and Mark as we start off the show. But Case, how's the week?
Oh, it's been great. Yeah, and it's really good. Mark and I actually got to do something pretty fun last week. We had a business meeting out of town. We get together with other advisor offices across the country a few times a year and share ideas and, really just working on improving. How can we be better for our clients? And so we had our business meeting, and then we peeled off and went to a little racing event. Nice. And we actually got to drive some pretty cool cars. So we got to hit the racetrack. I was in a Porsche, and Mark drove a Lamborghini. And, Mark did crash the car. But no, I'm just kidding.
True.
He didn't crash it. No, but we had a lot of fun. It was really cool. I told my wife I might have an expensive new hobby, so we'll see how that goes. But it was a lot of fun. It was a lot of fun. It was really cool being there with everybody sharing ideas. And you know what? We always walk away with something valuable, something that we feel like we can bring back to the office, that we can improve in how we work with our clients, the type of planning that we do, and really what we see coming down the pipeline, right? I mean, we live in a crazy time. When you think of everything that's going on in the world, it's wild. And so just being able to share and bounce ideas off each other has been great. And then we also have Craig in the studio with us today, which is great. So he's a new advisor here at Elevated. We're really happy to have him. You excited to be here, Craig?
I'm very glad to be here. Thank you, Casey.
All right. Yeah. So no, things have been really good. We've had a great few weeks around the office, and happy to be here in the studio with you, Morgan.
Yeah, and again, we want to remind our listeners that Craig's been observing the show. And now he has finally decided to dive in, and he's on the show. Steve O'Flynn's on the show, and it's all about getting you prepared for retirement. I love the fact that both Mark and Casey, really the whole team, they go on these trips and they get to, kind of rub elbows with people in the business and from all over the country, and you get a better idea of how things are going, maybe in the Northeast, Southeast, Midwest, and you bring those ideas to the same table, and it helps everybody's planning, or at least the approach to planning. So again, we got a fully loaded show. We're going to talk about all these different articles, the latest when it comes to retirement planning. We want to remind you too that we don't just get on here and talk the talk. We walk the walk as well, meaning we give you an opportunity to get on the calendar with Elevated Financial Management. The number to call to grab one of our no-cost, no-obligation appointments is 866-668-3625. That's 866-668-3625. If you're sitting on a portfolio, that's not a plan. If you're frustrated, you're halfway down the path, get a second opinion. Call our number, 866-668-3625. All right, first article up for grabs, guys. Many say they'll take Social Security benefits early despite lower payments. Why did this jump out at you? And I think this could be nail on the head. A lot of people are feeling the pressure to go early.
Yeah, this is something that Casey and I pretty much run into with every appointment that comes in our office right now. Social Security is top of mind, and this article really helps to drive home that point. I love this where it said half of Americans who have yet to retire, 53% are concerned or very concerned about outliving their assets. And then this number, 87% are at least a little concerned because they don't know how to generate income in retirement. So some of these decisions that our clients are making is being based on emotion. and not necessarily solid intel, you might say, or facts, right? We tend to, if clients have other assets in other buckets, we call it, we try and help them to see why waiting does end up making a lot of sense. We don't feel Social Security is going away. We know changes are coming. That has to happen. I think we all agree with that. And there could be some significant ones. But right now, for most of our clients, waiting till at least full retirement age, or if we ever say on the show, FRA, full retirement age, waiting is going to end up making the most sense. And average life expectancy, if a client, female or male, lives to normal life expectancy, if they go early, let's say at 62, they're going to be walking away from close to $200,000 in guaranteed income. And that is a lot to walk away from. And I think working with someone that really, I'm a nationally certified Social Security advisor, so it's a big part of what we do in this office is helping clients make a good decisions when it comes to their Social Security planning, because it is a major leg to their retirement income once they decide to pull the lever.
Yeah, and I'll say too that I think it's really important. You know, Mark mentioned that these decisions are being made from an emotional standpoint, right?
Yes.
And you know, I've said this before, but I think this is so valuable. You think about the decisions that you made in your life. Probably some of the decisions that maybe you wish you could undo came from an emotional perspective, right? I think about decisions that I've made in my life, and generally the ones that I wish I could change come from a very emotional place, right? Yeah. And so what we're encouraging here is we're not encouraging taking the emotion out of your finances completely, but when it comes to decision making, is it founded on factual information, right? Have the numbers been ran? What does this look like for you? Now, the numbers, the finances should all be there to support the emotional aspect of your retirement, which is all the fun things that you want to do. But we can't let those things drive the decisions that we make, right? Those decisions have to come from factual information, from reality. And that's what we see a lot, especially when it comes to Social Security. People have a very emotional reaction to when they take their Social Security. They're worried it's not going to be there, that Social Security is just going to disappear, benefits are going to get cut, they're not going to live long enough, all those kinds of things. And we're not saying that there isn't any validity to those concerns, but have you looked at the whole picture? Have you looked at every part and piece of it? And that's really what we're trying to encourage with this, is take the time to understand it.
Yeah. I mean, when you think about it, there's so many people out there. We talk about these numbers all the time. They're sitting on portfolios. They don't have a plan. And then all of a sudden they're closing in on retirement. And what do they feel like they've got? They've got their portfolio and they've got Social Security. And there's this fear of not knowing, what's that portfolio going to do for you? How long is your money going to last? Do you even know? Well, oh my gosh, I've got to take Social Security now, because there's this fear that I'm not going to have enough. Now, if you have a plan, as you guys are talking about, if you have something that's mapped out that includes Social Security on how you're going to take it, when you're going to take it, and again, this is individual. I mean, you really need to have a customized plan. Once you have that, that's that confidence we talk about.
Yeah, it's interesting you mentioned that, Morgan, because this statement was startling to me. It says many non-retirees expressed anxiety about retirement. 54% saying the idea of no more regular paychecks is concerning. But notice this, 23% describing it as terrifying. Okay, that's a pretty strong word that I would be.
That is terrifying, right? You think about your paycheck disappearing.
Right? This isn't funny, right? We're not making light of this, but this is serious. And that's why we believe so much in wanting people to come in and talk with someone that's going to be able to help them with this, because if you don't and you wait until it's, crunch time, you can't really go back and fix it for a lot of the people we talk with. And that's a scary thought when you think about it.
This is a big quote from the article that I found really valuable. It says, among retired respondents, so people that responded to the survey, 74% that responded generate less than 75% of their last paycheck in monthly income, and 46% receive less than half of their pre-retirement income. Man, when you think about that, that's a big lifestyle cut, right? And I think that's the thing. We've talked about this before, that there's a fallacy that when I get to retirement, I only need 80% of my income from when I was working. Well, Are you planning on living 80% of the life that you were living when you were working? Probably not, right? That's not your dream retirement. Your dream retirement is probably actually spending more, right? Going and traveling and doing the things that you want to do and all those things that you've been waiting to do. So I think it's so important that we really pay attention to creating that income. And that's a big point in this article is people are unsure of how to generate the income. They're worried about it. And again, making emotional decisions that often don't lead down the right path. So if this is you, if you're concerned, if you don't know how to create the income, you're unsure about the best way to do it, and you don't know how long the income's going to last, because that's really what scares everybody, is how long can I take X amount of income from my retirement accounts? If you're concerned about those things, when you should start your Social Security, what to do for Medicare, how taxes are going to impact the income that you have, all of those things are items that we'll discuss when we sit down and have a conversation with you. And we help you figure out how to address each of those concerns. We put a plan together, do an analysis, and figure out what the right thing is for you to get you from where you are to where you want to be. So don't hesitate. Pick up the phone and give us a call.
All right, here's the phone number. It's a complimentary appointment, meaning you're leaving the checkbook at home and there's no obligation to become a client. Call the number, secure one of these appointments, 866-668-3625. That's 866-668-3625. This is an opportunity for you to get off procrastination's couch and get moving on this. And again, no obligation to become a client, but you'll see if you're on track for your retirement. 866-668-3625. Call that number, secure one of our appointments right now. 866-668-3625. When we return on Elevate Your Wealth, we'll talk about the bear market losses. Is it a dangerous illusion? It's coming up next. You're listening to Elevate Your Wealth. Welcome back into Elevate Your Wealth. Your hosts, Mark Stimpson, Casey Elkins, special guests Craig Roth, and Steve O. Flynn. You can find them all at Elevated Financial Management right here in Seattle. Check out the website. It's a resource, efmnw.com. All letters, efmnw.com. Links to the TV show. Our radio shows are in podcast form. Just good information and background information on the team. And they've got well over 50 years combined experience between these four. And again, it's all about getting you ready for retirement, Seattle. All right, so we've got a nice resource for you. It's a book, and there's a way to get it. We'll tell you about that, but it's Break the Glass. Casey, real quickly, you wanted to bring this book to the masses because it is a resource.
It really is, and I'll just say this. Mark and I are very, very proud of this book. We worked really hard to put this together and to do it in such a way that it's not full of industry terms and words that, general population wouldn't understand. It's really written for clients. It's written for people that want to educate themselves and want to know what to look out for, what to be concerned with. I think the title of the book is really, really important. Break the Glass. If you've ever been in a emergency type situation, you have to take action. And so we relate it to almost like being in a fire inside of the book. And so what that means is that it can be paralyzing because there's so many decisions that you have to make. And approaching retirement, we see it all the time. People get analysis paralysis. They get concerned and they don't know what decision to make, when to make it, and they just kind of freeze like a deer in the headlights. And that's that fight or flight. And so what we're saying with the book is you've got to take action, break the glass, grab the fire extinguisher, and start putting a plan together for your retirement. And so really it's breaktheglassbook.com. It's no cost. You can go to the website, you enter some information, we'll ship the book out to you. And it's a great resource if you're trying to educate yourself, which I think realistically, if you're listening to our show, you probably are trying to educate yourself, right? Sure. That's really the goal behind it. So this is a great resource for you. Don't hesitate. Go to breaktheglassbook.com. We'd love to send you a copy, and it'll really help put into perspective the decisions that need to be made as you're approaching retirement.
Well, and just to point out, too, as you just said, this is a free resource for you. So grab the book, breaktheglassbook.com. Enter your information. They'll ship it out to you. There's no obligation to become a client, but it's a good resource for you. Breaktheglassbook.com. All right, we're going to shift gears and head to this article, guys. Bear market losses, a dangerous illusion. This jumps out at you. Lance Roberts, realinvestmentadvice.com, pinned this article for us.
Yeah, this is something that got our attention too, because a bear market loss really, by a broad stroke definition, is the market down 20%, right? And so this is something that I think is misunderstood, and people think when you just look at a chart, let's say of percentage type returns, the bottom line is the bull markets will outperform the bear markets over time, right? But this is dangerous when it comes to if you're in the retirement red zone, right? Which we talk about this all the time. Mm-hmm. Losses at the wrong time can be devastating. We have a slide in our class that we teach at the college level, and we spend quite a bit of time on what we call sequence of return risk. And we do a good job of showing a history of almost 25 years. And if those bear markets happen at the beginning of your retirement, you can run out of money probably 18, 17 years, depending on the sequence of those bad returns. And people don't think enough about this. And Wall Street definitely doesn't talk about that as a problem like they should, because if you don't understand sequence of return risk, you can run out of money before you even have any idea. I think Craig's got a thought on this as well.
Absolutely, Mark. And I noticed in the article one explanation that really rang true for me. Lance shows that an average rate of return of 10%, for example, you get 10% in the first year, 10% in the second year, and then you lose 10% in the third year. Your average rate of return is cut in half to 5%.
Right.
And then to get back to 10, you need a 30% return in that next year just to get back to that long-term average.
Yeah. That's the thing, right? Is the averages can be deceiving. Yeah. That's the biggest piece behind this, right? Because everybody seems to think that they're 1-to-1, right? If I lose 5%, I need a 5% return to get back. Well, that's not the case, and it's not as noticeable at a lower return. So, for example, if you lose 5%, you actually need a 5.3% return to get back to where you started. But if you amplify those numbers, right, let's say you have a 50% loss, you have to have a 100% return to get back to where you started. So those are big numbers. Now, you're probably, hopefully not going to have a 50% loss, right, if your money's being managed the right way, things like that. But that being said, it's not unheard of in the market, right? In 2000, we had a 50% loss in the market. In 2008, we had a 50% loss in the market. Those are big numbers. And as Mark mentioned, the retirement red zone, if you're getting close to retirement and you have that type of loss, you may not have the time to recover, right? And that uneasy feeling that people have, kind of like that pit in your stomach of like, I don't know where this is. I don't know if I'm going to be okay. It's probably because you recognize that something is different, right? Now that you're approaching retirement, something is different. And the way that you invested when you were 40, that's made you successful to now 60 or 65, that's not what will keep you successful as you move into retirement. Something has to change because your life's about to change. And so we have to make adjustments to suit that.
Well, and let's go back in time. I remember the old Westerns. Whenever there was going to be an attack, you would hear the war drums beating. And you were just waiting for that attack to come. It was definitely on its way. You just didn't know when. And I kind of feel like we're in that war drum scenario where everybody's telling us there's going to be a correction. We keep seeing the market do what the market is doing, but that correction's coming. Mm-hmm. So you need to be prepared for it.
Right. Yeah. There's warning signs.
Yeah. Well, I want to add something here I think is really important, that we need to understand the math of loss. And this was a great point. From 2007 to 2009, the S&P 500 lost over 56%. To recover that, investors needed more than 113% in gains. The market didn't break even until 2013. So do the math. That's 6 years to claw back, right? To get back to where we were at. And that assumes no withdrawals and full participation in the rebound. The problem is we get emotional, right? We take the money out. Mm-hmm. So then you went to cash. So you didn't even enjoy that rebound. And we talk about this in our classes and in our office all the time. This is something that a lot of folks are not taking seriously enough to understand the real math of these type of devastating losses.
You know, I actually met a gentleman that did exactly what you just described. He came to us after a workshop that we teach, and he got out when Trump was elected the first time because he was nervous. He was concerned. There was a lot of conversation that the Trump was going to go, or that the market was going to go down, all these kinds of things. So he moved to cash. And then he sat out Trump's entire presidency because he was concerned that the market was going to go down. So he missed all that run up. And then he continued to be nervous even after the next election. And then he's trying to figure out, when do I buy back in? And that's the concern that we see here, right? Whether it's political things or just whatever's happening in the world or a loss in the market, people are concerned. And so they make these emotional decisions that tend to unwind the progress that they've had.
So, guys, let's take a short break and just say, look, if you're concerned out there and you want to have this conversation, you can do so with Elevated Financial Management. It's no cost, no obligation. Grab an appointment right now, 866-668-3625. Again, the number, 866-668-3625. That's 866-668-3625. No cost, no obligation. All right, so the thing I love about doing these articles, there's a part of the article that kind of gives us at least a starting point for solutions. And that is, if the market's not working, maybe some strategies that do. Steve?
Yeah, so there's 6 strategies listed in this article, and it's situational, of course, but these are the 6 strategies that it describes. So number 1, limit the downside. Avoiding significant losses matters more than capturing every bit of upside. Maintain a cash buffer. Have 2 to 3 years of living expenses in cash or short-term bonds. Rebalance with discipline. Use tactical risk shifts. Protect in retirement. We do talk about that, the retirement red zone. If you're near or in retirement, reducing sequence risk, exactly how Mark described it. And lastly, number 6, respect the cycle. Bear markets are part of investing, but they are not harmless.
Yeah, so if you're concerned about anything we just talked about in this article, especially about market losses, you are concerned about when to take Social Security, if you've saved at least $250,000 or more, work at Boeing or any of our great companies in our area, please pick up the phone, give us a call, because we can help you with tax planning. We didn't talk about that much today, but we have a CPA in our office. We want to get you a copy of our book. So please, if you're maybe thinking about this, you're anxious about what to do, please just pick up the phone, give us a call, let us help.
All right, here's the phone number, 866-668-3625. We've got a limited number of appointments, but they are complimentary, meaning you're leaving the checkbook at home and you're not obligated to become a client. This number is to call and grab one, 866-668-3625. That's 866-668-3625. When we return on Elevate Your Wealth, we're going to get into, Social Security. Many Americans expecting that Social Security benefits, they're going to be there when they retire, but they're worried they're not going to be able to get them. We'll talk about that coming up next. We are back on Elevate Your Wealth, powered by Elevated Financial Management right here in Seattle. Hosted by Mark Stimpson and Casey Elkins with special guests Steve Flynn and Craig Roth. Again, they're all part of the team at Elevated Financial Management helping Seattle get ready for retirement. Certified financial fiduciaries, yes, helping hundreds of their clients prepare for the big day and beyond. Of course, it's all about having the plan. I'm Morgan Patrick. Absolute pleasure to jump on. We talk about the latest articles that are out there about retirement, and so many people are dialed in on this. So many people are concerned about this, and there are a lot of people that aren't planning for this. So keep that in mind. We're going to give you an opportunity for a no-cost, no-obligation appointment with Elevated Financial Management. You can come in and talk about your situation. If you're sitting on a portfolio, no plan, grab one of the appointments. If you're halfway down the path, you're frustrated, get one of the appointments for a second opinion. Easy to do it at any time during the show. Dial this number, 866-668-3625. That's 866-668-3625. All right, guys, we're going to talk about a survey, this latest one that's out. Many Americans expect to rely on Social Security benefits when they actually retire, but they're worried they're not going to actually get them. Now, this is something that we bring up on the show quite a bit. So the opportunity to kind of dispel this rumor in some form or fashion is right now.
Yeah, and you know what? I'll tell you why we're talking about this. We talk about Social Security a lot. We talk about it in our book, Break the Glass. We talk about it with every client that comes in. This is a big piece of people's retirement. And so this quote from the article, I think, summarizes it really well. It says more than 52% of Americans who haven't retired yet say they expect to rely on Social Security benefits to pay their necessary expenses. So more than half of Americans. Now, when you think about that, there's a lot of other people that rely on it in part, right? But this is saying that that's a substantial piece of the income for these people. Then the second piece of this is that more than 3 out of 4 people, so 76%, are concerned that they won't get the full benefits that they've been promised. So to kind of summarize that, you've got the majority of the population saying, I'm relying on this for my income. And then the majority of those people are saying, I don't know if it's really going to be there for me, right? So this is a big concern, and rightfully so, because when you think about a 3-legged stool for retirement, we've used that illustration. Maybe you've heard it in other places, but you've got ideally one source of income that's a pension, which a lot of people don't have anymore. Second is Social Security, and third is an investment account. So if you don't have a pension and you're worried that Social Security isn't going to be there, if you could try and sit on you could try and sit on a pogo stick, but it's not going to go real well, right? So it really comes down to trying to make sure that you have the income that you need and that you're set up in the right way so that you can continue on living the life that you want to live.
Yeah, I can't get the pogo stick out of my mind. But
I was going to say, I mean, how hard is it to bounce on a pogo stick?
It's really hard, even if you're.
I mean, you
standing
might
up,
have a few
out.
successful bounces, but eventually you're going to topple.
Yeah,
that's
right. Be
right.
a problem. But Casey mentioned something that I think is really, really important here. People don't realize. We know that annual report is we've got about maybe little shy of 9 years before the trust fund does run out. We know that's coming. Casey and I go back and forth on whether we think, a 20 or 25% reduction is coming. I tend to think it is, but it'll be a political nightmare for all these boys and girls that don't want to deal with this right now, and they keep kicking the can down the road. We all know that too. So do you have a plan? Let's just say it does happen. And you've been living, let's say, on $2,000 a month, Social Security, and all of a sudden we lose 25% of that. We're now going to be at $1,500 a month, maybe 10 years from now, when things are even more expensive than what we see right now today. That's going to be a disaster for most individuals. They're going to struggle to make ends meet. And so do you have a plan to replace that income? Let's just say if it happens. And that's what we're doing for our clients. We're putting in place a plan, income replacement, Social Security replacement, pension replacement, so that they have the income that they can count on each and every month and not have to worry about if there's a little bit of a downturn.
Yeah, that income is what gives you financial freedom. Yeah. That's really what this comes back to, right? You think about the FIRE movement, right? FIRE, financially independent, retire early, those type of things. You think about having fun in retirement, that all comes back to income. It's not about having $4 million in your 401k. That's great if you do, but take that $4 million, take your statement to McDonald's and ask for a cheeseburger. They won't give you one. You got to take money out of the account, which means you have to turn it into income. So until you have the income that you need, your retirement dreams are not going to happen. And so that's what all this comes back to. Social Security is supposed to be your retirement income. And if you're concerned that it isn't going to be there, that is something that has absolutely got to be addressed.
Well, and I was just going to add this. The fact that so many people are concerned probably tells us most feel like they haven't saved enough for retirement. Now, that being said, just the importance of planning, the importance of knowing exactly what is in your tank, like how much gas you have for retirement and how far that's going to take you. How important is that, guys? Because if you don't know, I mean, how are you going to go about this? I mean, that's, have a plan. Steve.
Yeah, and just like the article says, 58% of Americans say the retirement savings are behind what they should be. And we have that in our office. We have people come in and they've got a nest egg for their retirement, but they don't know. They don't know if that's going to be enough to see them through retirement. And that's part of our planning service. We're able to help them see if they're on track or not.
Yeah, in fact, it's funny because we have a wonderful attorney client, okay, and she couldn't be a bigger bandwagon hornblower for us because she came to us with a fair chunk of money. She believed she didn't save enough, but her concern was she didn't know how to turn it into income. And we were talking, $4 or $5 million, and she was wondering how to do it. Right. And now that we've set her up, she has a private pension. She's getting more in retirement now than she was working as a full-time attorney. And how wonderful that is for her. In fact, she's thinking about now purchasing a home in Hawaii. So we are just so thankful. And I just want to thank the audience that's listening right now that we are so grateful that you trust us with your hard-earned retirement dollars to make what we call your retirement dreams come to life and become a reality and not just a fairy tale.
Got an opportunity for you to grab a great resource. It's a book, Break the Glass. The guys have put this out. They've put a website up. You can go to the website. You can claim one of these books. They'll ship it out to you. No cost, no obligation. BreakTheGlassBook.com. That's BreakTheGlassBook.com. Again, a great reference for you as you're making your way towards retirement. You've been thinking about the planning process. This is going to give you a lot of nice knowledge when it comes to retirement planning. BreakTheGlassBook.com. Go to the website, sign up for it. They'll ship the book out to you, no cost, and it's no obligation. Great resource. So back to it. And the article, again, many Americans expect to rely on Social Security benefits when they retire, but they're worried they're not going to actually get them. Get this, guys. Older workers that are out there more likely to say they're behind, according to this article, when it comes to savings where they need to be on retirement and putting their monies away. Gen Z, 46% behind. Millennials, 57% behind. Gen X, 69%. And even the boomers, one of the wealthiest generations out there, at 59%. Craig.
Well, that's absolutely right, Morgan. And, one of the most joyous things we do here at Elevated and the opportunity that we have to sit with someone who has all this anxiety about whether they can retire, how long that money is going to last, and what sort of income might they have, to be able to show them how it's possible, how we can plan to replace the lost income, how we can plan to make it last their lifetime and turn that anxiety into confidence. That's really one of the things that we get the most out of in this work. And there are 3 tips really just to make that happen. Take full advantage of tax advantaged accounts, contribute to your 401k, use a Roth IRA, automate things as much as possible so that you're saving the maximum that you can. And then finally, in the article, it points out, work with a financial advisor, someone who understands what you want in your retirement, what a happy retirement looks like for you. There are studies that show that working with a professional that understands you can add significantly to your wealth over time.
I'd like to add to what Craig just said about automating as much as possible, right? That's where it's so important to usually just have that money deducted right directly from your paycheck. Yeah, you just do. We all will come up with the what ifs and I need it for this, right? And we won't save it. I remember with my children when they were on their paper route, I made them save 15% of every check from the time they were little and start putting that money away. So it can really make a difference. Have it on automatic pilot, because if you do, you'll be disciplined. It's not as hard than writing your own check, right? And I can't overemphasize how important automation is.
Yeah, that savings account that Mark had the kids save, that's how he got new golf clubs. So it worked worked out really well. Yeah. No, but Mark, you make a great point, right? It's people spend the money that hits their bank account. Mm-hmm. So if you're expecting to have money come into your bank account and then take care of all your other things and then save what you have left at the end of the month, it isn't going to happen, right? When you're first starting out and you make $30,000 a year, somehow you find a way to live on $30,000. Yeah. But as time goes on and you make $40,000, $50,000, $60,000, hopefully more than that too, as you make those additional funds, somehow you find a way to live on whatever that income is. It's not like you used to live on 30, now you make 60, and so you save 30 grand.
Yeah.
Most people don't do that. They spend the 60, right? So I know you have a thought, Steve.
I was just thinking, if you don't see it, you don't spend it. That's
Yeah.
one. And also, so many people are so close to retirement that we meet with, and they are putting as much away as they can. We see that an awful lot. They're living like on a net low amount of money, but they are really putting that 401k contribution.
Yeah, that's it, right? I mean, it's you see that need burning, that fire burning in them as they get closer to retirement. So if you have that desire to do it now, that can really set you up in the right way. So this is your opportunity, right? If you want to sit down, you want to have the conversation, you want to figure out, are you on the right track? Are you moving in the right direction? What can you do to be set up better in your retirement than the path that you're currently on? This is your chance. Don't hesitate. Pick up the phone and give us a call.
All right, we've got the appointments. They are complimentary, no obligation. Call this number, 866-668-3625. Again, that number, 866-668-3625. One more time, 866-668-3625. This is an opportunity for you. Jump on it right now. No cost, no obligation, 866-668-3625. When we return on Elevate Your Wealth, it's time for scenarios. We've gathered a handful. We'll throw them at the fellas, see what they come up with next. Back on Elevate Your Wealth, powered by Elevated Financial Management. You can find us right here in Seattle. The website is a resource. Check it out, efmnw.com. All letters, efmnw.com. Links to the TV show. Our radio shows are in podcast form. Again, efmnw.com. Our hosts are Mark Stimpson and Casey Elkins. Our special guests are Craig Roth and Steve O. Flynn, all part of the team at Elevated Financial Management. They've got well over 50 years of combined experience helping their clients get ready for retirement. Certified financial fiduciaries, yes sirree. I'm Morgan Patrick. Pleasure to jump on. And now we're at scenarios. These questions we'll ask of our advisors. I want to remind you that you may hear one that is similar to what you're going through, but it's not exactly what you're going through. So make sure that you grab one of our appointments and come in and talk about your own scenario. If you have not started planning, this is an excellent opportunity for you. If you're in the middle of something and need that second opinion, jump on one of these appointments. You can call at any time, 866-668-3625. That's 866-668-3625. All right, Mark, you're first up. Here it is. They plan to travel a lot in retirement, but now one of them is facing health limitations. How do they pivot at this point, their spending plan, when dreams change, but the retirement timeline does not?
Yeah, this hits home for both Casey and I. We talk a lot about wanting our clients to have more of their income early in retirement, in the early years, right? For this exact reason that this question is about, right? People plan, they want to have a long retirement. My grandfather on my mom's side died 6 months after he retired, didn't get to spend anything when it came to all the pension he would have had coming. And so this is important to think about. I'm going to talk about a client right now that happened not too long ago, got his plan all done. They came in for delivery, basically, and I could just tell by the look on their face something was wrong. And I said, "What's going on, you guys?" And they proceeded to tell me how the husband had now been diagnosed with one of the most aggressive forms of prostate cancer. Everything changed for them like a light switch. And they now were, he was going to plan on working another couple years. He stopped. They were going to start doing as much as they could together, because his time is more limited, up to this point right now. So again, I just want to say you need to have a plan, right? Because life is fluid. It's going to change. And if we don't have a way to pivot and maybe, have a complete different idea as to what's going to happen, but I can't overemphasize, I want our clients to start making memories with their children and their grandchildren now, right? Mm-hmm. Not wait, because, things are going to change. My mom is basically in hospice right now, so I'm dealing with that. So again, I understand these things, but these can happen to younger people. Now, my mom is almost 92. There's a big difference than that happening when you're 60 or 62 years old, right? So again, we help our clients with the emotional things that will come into play that a lot of your big box stores, they don't even talk about that type of stuff. We spend a lot of time with our clients helping them figure out where they're going to live, focusing on income, but we focus a lot on the emotional part of retirement planning that sometimes is, I think, more critical than the actual money part is. I think you probably agree with that, right, Case?
I absolutely do. You know, we talk about the 3 phases to retirement, right? You've got the go-go years, the slow-go years, and the no-go years. And so, you know, when do you want the most income? You want it up front, right? And I think the key here is that we have to build plans that allow some level of flexibility, right?
Yeah.
That's really it. A plan, I mean, it's just like a roadmap, right? You have a plan to drive on this particular path to get to your destination, but roads close, there's construction, whatever it is, and you have to make a change. Your goal hasn't changed, right? The end result hasn't changed, but how you get there has to be adjusted, right? And that's really what this comes down to. So, you know, it's really important to think about that emotional piece, and kind of like we said earlier, it's not that there should be no emotion in your planning. That's not it. The ultimate goal is not, well, I just want to have the most money in my 401k and I want to get the most from Social Security and that's all I care about. That's really not it, right? We want to make those things be as efficient and as optimized as they can be so that your emotional goals in retirement can be met. But you still don't want to make emotional decisions. So there's a balance among all these things. And I'll go back to something that Craig said earlier. You know, working with a financial advisor, that person should be helping you strike that balance. Yeah. That's the key. If your financial advisor is only asking you about what level of risk you want to take, what type of investments you like, and those types of things. What rate of
return you're going to get.
Yeah, if that's all they're concerned about, gosh, I don't really think they're retirement planners, right? And that's really what's so different. It's not just about maximum return. It's about maximum return in your life so that you can go and enjoy it and do the things that you've been waiting to do and not be concerned about the dollars.
Yeah, there are a lot of question marks out there for a lot of our listeners. Take charge, take charge of your own retirement. Make sure you have a plan. The opportunity to get on the calendar with Elevated Financial Management and have this kind of conversation is right now. Grab one of our complimentary appointments, 866-668-3625. That number again, 866-668-3625. Don't wait. Don't procrastinate. This is the opportunity. Call now, 866-668-3625. That's no cost, no obligation. All right, Steve, next scenario to you. Portfolio heavy in tech stocks. Great during the ups, but the recent dips gave them a little bit of the heartburn. So it's time, I guess the question, is it time to rebalance, or do they ride it out now that they're no longer in the accumulation phase?
Well, what is a tech stock? There's a question. Tech really is, to most people, the big names. You've got your Googles, your NVIDIAs that many people even haven't heard of. You've got your Microsoft. But what does having a tech stock mean? It means you're in one of the most volatile sectors of the whole stock market. So you do get the growth, and there's been great growth. But should the market go down, and when it goes down, those get hit hardest. So tech stocks for sure. And it's interesting to me, when we meet with people, we do offer a complimentary portfolio review. And most people don't know how heavily weighted we say they are in tech until we kind of reveal to them. And why? Because I look at their statements, and their statements will say, hey, you're in a target date 2030 fund or a mutual fund, but it doesn't really tell them the underlying stocks that they have. They see the balance, they see the funds, but I don't really see what's inside there. We call it like X-raying in, and it can be quite revealing to some people to basically say, your retirement, 25% of it is in tech. How do you feel about that?
Yeah.
I would just want to say, how many times, Casey, have you and I, when Casey's doing a review, and he'll look at that client sitting there with the big screen that they're looking at and go, did you realize that Microsoft was your largest holding? And how many times do they say, I didn't even know that?
Yeah. A lot of times people are surprised by the holdings that they have, right? Because they're hidden inside of a fund name, right? It's, total value fund or 2030 target date fund, like Steve said. And the holdings are hidden inside of that, right? But that's really, at the end of the day, that's a marketing name, right? That whatever the name of that index is, or the mutual fund, or whatever you want to call it, that realistically is just a marketing name. So what's inside of it is the question. And that's where Steve brought out a great point about the X-raying to see what the holdings are. People are commonly surprised, like you said, Mark, about what their actual investments are. People don't know what's inside because you just sign up for your 401k holdings and you hope for the best. So do you rebalance? Do you not? A lot of it depends on what the underlying investments are. And are they appropriate to what you're trying to do? That's really the big question here. It's not that Microsoft is a bad investment or Apple. It's not that they're the best investments. Are they the right investments for what your goals are? That's the question.
If you want to grab a portfolio review, call our number right now, get one of our complimentary appointments, and go through that. 866-668-3625. That's 866-668-3625. Again, a complimentary portfolio review. See where your risk level is at. 866-668-3625. All right, Craig, you're next up. Here it is. They're both 67, so we have a couple scenario. Still arguing about when to take Social Security. One wants it right now. The other wants to wait until 70. What is the best way to approach this debate without turning dinner into a financial standoff when it comes to couples?
Well, Morgan, that's a good one. Thanks, especially with Thanksgiving coming up here. Wouldn't it be great to have somebody who could be standing next to the table and just throw one of those yellow flags down and say, "Time out here. Let's take a review. We'll have an expedited review of these decisions," and might come back with some really good news. The answer might be, why don't you do both? Sometimes we have clients where it does make sense for one spouse to take it sooner and the other one to wait, and it comes out better. There are so many different ways to do it that it's important that your advisors speak with you about what works best in your family.
Yeah, in fact, I'm glad he mentioned this because Casey and I both know there is no way to know for sure because we don't know how long each of us are going to live, right? So if we know the crossover point is about 11 and a half, 12 years if we were to start at 62 versus waiting till, let's say, 66, right? So again, there's so much to individual decisions here. We can't answer it 100% the same, and there is no cookie cutter answer for every client. Every client situation is really different, and we need to be cognizant of that.
Yeah, it really is. And, you don't plan in a vacuum. Things change. Everybody's situation is unique. It does make sense for some people to start at 62. Other times it absolutely does not. Sometimes it makes sense to wait till 70. Sometimes that doesn't make sense for others. So it is situational, and that's where having a customized plan really comes into play.
Yeah, so if you're thinking about what should I do when it comes to my Social Security planning, we've got questions. Should I go early? Should I wait? What about taxes? Have you thought about the tax implications of how and when you take your money? Do I want to do a Roth conversion? That's a big buzzword right now. What about how do I pass money to my children? This and so much more. So please, if you're got $250,000 or more, these strategies will work best for you. So please give us a call, let us help, and put together a plan. And don't forget, we'll also send you one of our books if you call us.
Opportunity is knocking. Take advantage of this. This is a complimentary appointment. See if you're on track for retirement. Call now, 866-668-3625. That's 866-668-3625. Again, leave the checkbook at home, and you're not obligated to become a client, but you're going to get some information on where you sit as far as retirement. And as Mark mentioned, you can grab a copy of the book when you come in for the appointment, Break the Glass, and you can always go to the website, breaktheglassbook.com. Sign up for it. They'll ship it out to you. Again, that's breaktheglassbook.com. And to grab one of our appointments, call 866-668-3625. Another edition of Elevate Your Wealth is in the books. For Mark Stimpson, Casey Elkins, Craig Roth, and Steve Flynn, I'm Morgan Patrick. See you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.